By now, hopefully you've heard of a thing called the CARES Act. But what does it mean, and what does it mean for your personal taxes? In today's video, I've picked and pulled apart the CARES Act bill, and I'm going to be covering the top 7 highlights of the bill that can potentially affect your individual income tax return. Welcome to Money and Life TV. My name is Mike the CPA, and on this channel, we cover finances, investing, and taxes to help you build wealth. This video is a follow-up video to my 2021 tax update video. You can check it out by following the links in the description below if you want to see that. A lot of the items in the CARES Act actually apply and pertain to 2020. So this is something you're going to want to know about for this upcoming tax filing. Aside from the CARES Act, which we're going to cover now, a lot of you have been asking, how do you report coronavirus relief distributions that you've taken out of your retirement account? So like if you took money out of your 401k, or like if you took money out of your IRA, because you knew in 2020 you could actually take up to 100 grand out of those accounts and forego the 10% penalty. I'm going to have a video coming up on that. It's going to be one of my next videos, maybe next week or the following weekend, that covers that. Okay, to the CARES Act, ladies and gentlemen. Chipper's been hard at work putting together a Word document for you guys. You can download it for free via Dropbox. I'm going to leave the link for that. It's going to be in the description section, also in the comment section as well.
We're hard at work down here, keeping those free handouts and spreadsheets coming for you guys. Mike is slave driving me for all this 2021 content. Can somebody get me a glass of water? Anybody? Water? Anybody?
Okay guys, first things first, let's talk about the recovery rebate, which is known as stimulus checks. Many of you during 2020, you've received stimulus checks. Let me get these headphones out of my ear. No! Many of you received stimulus checks for $1,200, up to $2,400 if you were a married couple filing jointly. And for each qualifying child, you could even get $500 for each qualifying child. There's still a lot of confusion surrounding the stimulus check or, recovery rebates. Just know that none of that of what you received is going to be taxable. And even if your income goes over the thresholds they talked about back in 2020, it doesn't matter. The IRS is not going to do any sort of clawback on that money, even if your income turned out to be higher than expected and you received a larger stimulus payment than you should have. The second thing that changed due to the CARES Act actually applied to both tax years 2019 and 2020. Is what they did is they changed the interest limitation for businesses. Now, I mentioned this is for individuals, but a lot of the things from a business perspective actually do come back and affect your return, which was why I'm talking about it briefly here. With Tax Cuts and Jobs Act, what happened is they limited the amount of interest one could deduct to 30% of their EBITDA. And EBITDA stands for, I know it's a fun word to say, right? It stands for earnings before interest, taxes, depreciation, and amortization. So that's EBITDA. But they would limit it to 30%. And so what they did with the CARES Act is they said, we understand that people, meaning the business owners, might need to take on even more debt to keep their business afloat. We don't want to punish them for borrowing money. So what we're going to do is we're going to raise that threshold from 30% to 50%, allowing them to deduct more of the interest from their business loans. And that strictly is with business loans is what they're talking about here. They're not talking about your mortgage per se. Now, maybe if it's a rental property business, that's a different story. But they're not talking about your personal mortgage or your personal debt like credit cards and things like that. We're talking about interest for businesses. Now, number 3 is similar to number 1, but I just want to reiterate here, and this is where it talks about it. It says the proposed recovery rebates, the stimulus, will use 2019 tax returns. 2018 if the taxpayer has not filed in 2019. So they went off your 2018 return. To determine the advanced rebate amount and reconcile the rebate based on 2020 income. This means that taxpayers who receive a smaller rebate than they are eligible for based on 2020 income will receive the difference after filing a 2020 tax return. But the overpayments of rebates due to a higher income in 2020 will not be clawed back. So you might get more or less depending upon your income fluctuations, but neither will it be clawed back for tax purposes. You don't have to worry about paying tax on this particular rebate. It's an advanced refundable tax credit. Number 4, if you were lucky enough to have this situation, then good for you, honestly. Number 4 talks about certain employer payments of student loans on behalf of the employees are excluded from taxable income. Well, that's pretty nice. Employers may contribute up to $5,250 annually towards student loans of their employees, and the payments would be excluded from the employee's income. That is another nice feature of the CARES Act. If you got that deal, good for you. Number 5, now this was a nice benefit, and I've already mentioned this in a previous video. If you want, it's a 4-minute video if you want to check it out, how it works. But there is a $300 charitable contribution deduction that is this year, due to the CARES Act for 2020, above the line. So if you donated to charity in 2020, then $300 of that you get to take above the line, meaning you don't need to be able to itemize to benefit from a tax perspective from that contribution. Pretty cool. I wish they did this more often, but $300 above the line is what you get. Number 6, real briefly, let's talk about net operating losses. This one is huge. Massive. So let me read this to you real quick and I'll elaborate. It says the CARES Act allows a 5-year carryback of any NOL, net operating loss, generated in a taxable year beginning after December 31st, 2017 and before January 1st, 2021. So losses you've incurred, net operating losses in years 2018, 19, and 2020. In addition, fiscal year 2017 returns, i.e. returns that began before January 1st, 2018 and ended after December 31st, 2017, can now be carried back 2 years as a result of the technical correction to the effective date in the language of the Tax Cuts and Jobs Act, which originally applied to the prohibition on carrybacks to taxable years ending after December 31st, 2017. So let me back up here real quick. So if you're a business owner, and all of this relates back to your personal return, especially if you have a pass-through entity where when you make money from your business, it flows through a K1 and is all reported on your personal return. Because a lot of business owners actually pay taxes, not so much at the business level, but they pay tax on that income from their business on their personal return. A lot of people don't understand that, but that's a lot of how it can work. Let me give you an example. So with this carryback rule, in the past, maybe you're a business owner, maybe you've had a really, really good year in the past. And then let's say in 2015, because if you're for 2020, you can carry back to 2015. Let's say in 2015, you had a stellar year. You paid $1 million in tax. And let's say now in 2020, though, due to COVID, you're losing your shirt because your restaurant's closed or your business is hindered, whatever. Well, you can carry back that loss to 2015 and get all that tax you paid, or a good chunk of it, back in the form of a refund. And that's where a lot of people can access cash. I worked with an individual. I can't go into too many details here, but due to this CARES Act provision, in the past, he was killing it. His business was so lucrative. It was so successful. But in 2017, 18, 19, he started losing his shirt, unfortunately. Well, with those losses, we were able to carry it back to 2014 and 2015. I was able to get him over $1 million back in less than 3 months from the IRS. So this, with the CARES Act, if you have an NOL that you've generated in 2020, 19 is gone now, but for 2020, which is coming up, you can take a look at this and see if there's any net operating loss you can carry back, or see if it makes sense to carry forward. But that is one of the largest tax benefits the CARES Act provides, in my opinion. And lastly, let's talk about coronavirus relief distributions from retirement accounts, such as your 401k, IRA, etc. And number 7 says waives the 10% early withdrawal penalty on retirement account distributions for taxpayers facing virus-related challenges. Withdrawal amounts are taxable over 3 years, but taxpayers can recontribute the withdrawn funds into their retirement accounts for 3 years without affecting retirement account caps. Eligible retirement accounts include individual retirement accounts like IRAs, 401ks, and other qualified trusts, certain deferred compensation plans, and qualified annuities. The bill also waives required minimum distribution rules for certain retirement plans for calendar year 2020. So if you were worried about your RMD penalty for 2020, you don't have to worry about it. You can forego that. In fact, a lot of people I know did forego their RMD if they didn't need to take it. With that, okay, so what it's saying is you're penalized if you take a withdrawal out of your retirement account early. You're hit with that instant 10% penalty, and on top of that, you have to pay tax. That's why most people don't touch their retirement accounts, or they shouldn't anyways. They have to be cautious about that. With the coronavirus relief distributions, people were able to access that money and waive that 10% penalty. They're not able to avoid the tax. They still got to pay the tax. The IRS is giving them 3 years to pay it back, and they could withdraw up to $100,000 in 2020. All right, guys, those were the top 7 CARES Act rules that could potentially affect your personal tax filing come 2020. I hope you guys enjoyed this video. If you did, it would mean a lot to me if you drop a like on the video, leave a comment below. You can follow our weekly videos on finances, investing, and taxes. All you got to do is hit that red subscribe button down below, and don't forget to hit that bell notification icon. Apparently, if you don't hit the bell, nobody sees my videos, which is really frustrating because I spend a lot of time making these videos and trying to help people. So if you could do those 2 things, I would really appreciate it. And lastly, if you want to share this with friends and family, feel free to, especially the Word document and this video. Until then, I hope you have a wonderful week. I got a lot more content coming out that I'm looking forward to making. Hope you're having a great 2021 so far. Live life uncaged, and I'll see you in the next episode. Peace.